Hi investors, traders and friends, welcome to Neppy Invest. Time for an update to my momentum sentiment portfolio. You can see I've made one slight change just in the name of it. So instead of momentum sentiment, a bit verbose, I've decided just to shorten it, make it more simple and just calling it MS portfolio from here on in. Probably interchange between the two now and then again. So I have been making an update to this portfolio every week up until last week. So last week was the first time I have skipped an update. And the reason behind that was I had just a plethora of video ideas and I was hesitant to drop one of those ideas to do an update to my MS portfolio. So I think moving forward, I'm going to be more casual doing these updates, maybe once every 2-3 weeks or whenever needed, simply because the video ideas I have coming through are just never ending and I'm more willing or would rather do those other video ideas than an update to my MS portfolio. So before I get to the update, I'm going to talk about the overall market and look at the XJO. So this is the XJO. I like to look at the overall market. It keeps me balanced, and there's a lot of people right now thinking we're at a bit of a top, thinking we're in a bubble, that sort of thing. And there's also other people who believe the market's going to go on a bull run over the next 6-9 months. I've heard some numbers, it's going to go 20% higher, 30% higher. I believe it's impossible to know what the market's going to do in the short term or even medium term because there's a lot of factors at play right now. So one of those factors, of course, is quantitative easing and stimulus. The governments are trying to inflate asset prices. It's intentional what they're doing right now, and it's a very easy reason to understand. And it's all come back to the wealth effect. So the wealth effect just means if you own assets and asset prices are increasing, you feel more wealthy and you're more willing to spend. If asset prices go down, you're feeling less wealthy and you're less willing to spend. And spending is what stimulates the economy. Now, the question is, we could see an overstimulation of the economy just because of the amount of quantitative easing and stimulus. That is a potential, and that's why some people believe or fearing inflation. We are seeing bond yields go up, especially 5-10-year bond yields go up over the last 3 or 4 months, which is a sign the market is expecting some inflation. I believe there is potential for some reflation, which means you get some growth. That's what's leading to inflation, some growth, and that's the best way to get out debt is through reflation. We saw that after World War II. So back to the XJO, over the past 2 weeks, we've seen some volatility. We saw a really big down week 2 weeks ago, and the previous week we've seen a good rebound, good up week. And we can see the trading day on Monday, 1st or whatever, 2nd of February, we saw the candlestick on the day had a very large tail, which is a bullish sign, which means there's a fair bit of buying coming into the market. And usually when you see a candlestick with a large tail, there could be some bullishness in subsequent days. We saw that on Tuesday, Wednesday. The XJO went up quite a bit. The overall market went up a fair bit. So overall, the last 2 weeks, the XJO was up 0.59%. And that sort of rise over a 2-week period, I'd love to see that every 2 weeks for the next 10 years or so. So I did make one acquisition this week. Now this was Dation Gold. I put in a bid for Dation Gold about a month ago at 46 cents. The share price went higher and I didn't chase the share price, thankfully. And we have seen a bit of weakness in the gold prices in the meantime. So share prices of many gold companies have pulled back, and Dation Gold did pull back to 46 cents briefly on Thursday. So my buy bid was met by a seller, and I made an acquisition of Dation Gold just because I was a little bit patient. So at 46 cents, I'm pretty happy with that share price because I do believe that's a low risk buy, and I'll get into that in a second. My disposal for the week was Kogan. I actually made this disposal 2 weeks ago. Kogan. Now, this is a company that's in my long-term growth portfolio, so I'm not hesitant to short-term trade a company that I do hold in my long-term portfolio. And the reason I bought Kogan was it looks like it was developing a short-term uptrend, and that short-term uptrend was broken 2 weeks ago. And I'll show you the chart for that break in the short-term uptrend in a few minutes. So this is an update to my portfolio. So overall profits went from 7.1 million to close to $8 million. So very happy with the performance of my portfolio over the past 2 weeks. Best gainers were Zip, Smart Group and Hammer Metals. all up fairly good amounts. So Zip has been a stellar performer since I bought, so I'm very happy with that purchase. And again, that shows you that breakouts are very powerful. My worst performing companies are Red River, Stone Horse, and BrainChip, and there is potential I might move some of these companies to my long-term growth portfolio, because the more research I do on some of these companies, the more I like them for the medium to long term. So there is potential I might make some changes, some slight changes to the makeup of my portfolio. I'm not going to sell these companies, just transfer them to my other portfolio. So now I'm going to just go to individual companies. First company is Bluescope. This is one of the first companies I did buy when I set up this MS portfolio back in August, and it has been a stellar performer, particularly between August and November. We have seen 3 upgrades from the company from October. And typically, when you see 3 upgrades, you usually see the share price just respond in turn. But during the last 3 months, we haven't seen much of a share price appreciation with Bluescope, especially since that second profit upgrade in November, and the share price got to $18 with that upgrade, and the share price has been a bit negative since then. So there is potential I might sell out of Bluescope, particularly if it falls below $16. That would be very bearish. So even though they've had profit upgrades, the market is not responding to those upgrades. One could argue that the market had already priced those upgrades into the share price, and that's a potential. I wouldn't argue against that at all. So there is potential if a share price falls below $16, I might sell out of Bluescope. Contrary to Bluescope, Smart Group has been a stellar performer. So I've got 2 lines here. The upward sloping brown line from the bottom left to the top right is the trend, so the uptrend, and just following the uptrend. And the horizontal line at $7 is a line of resistance, or share price of resistance. And it broke through $7 on good volume and just kept going higher. And this just shows you what happens when you do have a breakout above resistance levels. You can see share price go significantly higher. Since then, it wouldn't have surprised me to see the share price test $7 again, but I think that's becoming less and less likely, just because a fair bit of volume has come into the share price of Smart Group over the past 4 trading days. It's gone up 10% in those 4 days. Dusk, another breakout here, just showing how powerful breakouts can be. This was a profit upgrade. Some traders believe about gaps always being filled. I don't believe gaps always be filled, especially when there's a breakout. I've seen it time and time again. When there's a breakout, share price just keeps going up and the gap never fills. And this could be an example of that. And the share price keeps going higher. Really nice looking chart with Dusk. And there's no point selling out of this just because the share price is rising. The mantra of always taking profits, or what is it? You never go broke taking profits. Well, you never get wealthy if you're always taking profits also. So this could be an example of a company that keeps going up and up and up for years and years, potentially. That's the best case scenario. And more than likely, the best case scenario doesn't play out. But anyway, long-term bullish with Dusk at the moment. Michael Hill, just like Bluescope, it's had 3 positive trading updates, and the market hasn't really responded well, particularly around the last previous positive trading update in January. In fact, the share price has gone backwards. So the last trading update, the share price went from about 68 cents to 73 cents. So on the day of the release of the positive trading update, there was some positive sentiment, and that's gone backwards. In fact, the share price has now gone below the pre-positive trading update share price, which just is insane for me. So a bit of negative sentiment's coming to Michael Hill. Maybe the market's just getting a bit nervous around all these positive trading updates in the retail space, believing this is a short-term positiveness around retail, and in the medium to long term, there's a lot of negative potential around retail trading moving forward. So I'm not sure what's happening with Michael Hill, but again, there's no reason to sell right now. If it falls below 65 cents or 64 cents, that could be potential sell for Michael Hill. Zip, completely different again. This is another example of a breakout and just how powerful breakouts can be. Now, Zip, I do have them on my long-term portfolio, and I decided to also trade this because of the release of the announcement. Very bullish update on this day where we saw the breakout. The share price went up a significant amount. I did buy on almost immediately on the news of this announcement, which I very rarely do. I always wait But on this breakout, I decided to buy straight away at the opening auction or nearabouts, and I've held firmly since then. The share price went up a significant amount that day, and then it's just, you can see the next 6 trading days, the share price went sideways, and then it's just gone higher since then. So really positive looking chart this for Zip. There is potential this is going to go significantly higher from here on in, and potentially match the valuation that Afterpay has. Zip's valuation is falling behind Afterpay's in relative terms. So Zip is only something like half. I won't argue Zip should be half the value of Afterpay. I think it should be a little bit more than half the value, but it's well undervalued compared to Afterpay in any case. I don't think you could argue against that. Hammer Metals. This is an example, again, another example of a breakout buy, and an example of why you should not be hesitant to buy when the share price increases in over 100% in one day, particularly if the announcement is very positive or bullish. So a fair bit of volatility, increasing volume. You can see the share price is still going up. So I bought it at 70 cents, at 7 cents, not 70 cents, at 7 cents the day after announcement. So you did see the share price get to around 9 cents at the end of the trading day on the announcement day, and then open around 7 cents the next day. A lot of selling at the opening auction, and I bought in around that at 7 cents. And the share price hasn't gone much below 7 cents. Since then, in fact, it keeps on rising. Looks like a bit of a, what do you call it, a bit of a pennant or flag forming, which is fairly bullish. I think if it gets above 10 cents, that would be massively bullish for Hammer Metals, particularly because I think there's going to be some good news flow over the next few months potentially, which should see the share price rise considerably from here on in. But don't bank on that. It's not always the case, so it's not 100% certain that's going to happen, but I think that could happen. Dation Gold, again, this is about a month ago, so towards the end of December, start of January. That's when I put the buy in. You can see it at 46 cents. I think a fairly low risk buy. Share price went as high as 56 cents or so a few days after I put the buy bid in. Some people would have been chasing as the share price went higher, but since then it's been leveling off, and 46 cents is a sort of a low risk buy. Why? Because if it gets around 45 cents, 44 cents, that'll be automatic sell. So Dation Gold, low risk buy at 46 cents. Hopefully it goes higher. Hopefully gold prices go higher. So Dation Gold's share price will be highly correlated to the gold prices moving forward. Not completely, because there is some positive sentiment otherwise around Dation Gold because it is a little bit undervalued. Kogan.com, or just Kogan we'll call it. So this was the short-term uptrend I was talking about. You can see that slope line. It looked like a really good short-term trend developing, and then that uptrend broke, and immediately as it broke, I sold out. Only a minimal loss of $50. You can see that when I sold out on that day, the share price kept falling, and the following day, they did have a trading update, and the share price fell 8% or something on that day. So I'm not sure if there's loose lips on Kogan the previous day, and that's why the uptrend failed, because it's really, I'm not going to say it's coincidental that the next day there was a trading update and the share price fell 8%, and ever since then the share price has been falling. So you can see why, how this works, or why it is successful. When the uptrend breaks, you sell out immediately because the share price has been falling ever since then. So that's all I've got the update 11 for my MS portfolio. If you have any questions, leave it in the comment section. And again, the last thing I always have to say is I'm not a professional advisor. So if you do need to seek out professional advice for your own circumstances, financial circumstances, make sure you seek out someone who is qualified and can speak to your own financial circumstances. Otherwise, that's all for this video. Have a good day. Have a good week. Speak to you soon. Bye.